Picture this. You wake up one morning in paradise, palm trees swaying outside your window, the Florida sunshine streaming through your bedroom, and you check your home value on Zillow. Your heart drops. Your dream home, the one you stretched every dollar to buy just 2 years ago, is now worth $40,000 less than what you paid for it. Welcome to Florida 2025, where the American dream has become a financial nightmare, and the housing market that once seemed bulletproof is now crumbling faster than a sandcastle at high tide. For decades, Florida represented the ultimate escape. Golden beaches, endless sunshine, no state income tax, and real estate that only went up. Investors poured billions into the Sunshine State, convinced they were buying pieces of paradise that would mint money forever. Families cashed out their life savings, convinced that Florida real estate was the safest bet in America. But today, that fairy tale is over, and the harsh reality is setting in across 10 cities where home values are in complete freefall. This isn't just another housing correction. This is a systematic collapse of a market built on speculation, climate denial, and the dangerous belief that growth could continue forever. What we're witnessing is the perfect storm of rising insurance costs, climate reality, population exodus, and a brutal awakening that Florida's housing market was nothing more than a house of cards waiting to collapse. Today, we're going to expose the truth that real estate agents don't want you to know, that tourism boards won't advertise, and that local governments are desperately trying to hide. We've analyzed the latest market data, foreclosure filings, and economic indicators to bring you the unvarnished reality of Florida's housing apocalypse. These 10 cities represent ground zero of America's most shocking real estate collapse, where homeowners are trapped, equity is evaporating, and the dream of Florida living has become a financial prison. But here's what makes this story even more devastating. While wealthy investors and out-of-state buyers can simply walk away from their losses, millions of working families who believed in the Florida dream are now stuck. They can't sell without taking crushing losses, they can't afford the skyrocketing insurance premiums, and they can't escape the financial quicksand that their dream homes have become. This is their story. This is the real Florida housing crisis of 2025. Starting at number 10, we have Sanford, a charming city just north of Orlando that was once considered the perfect escape from big city chaos. With its historic downtown and small-town atmosphere, Sanford became a magnet for families seeking affordable Florida living without the Orlando price tag. But that charm has turned toxic in 2025, as this once stable market experiences a devastating reality check. The numbers tell a brutal story. Home values in Sanford have plummeted 4.5% over the past year, with the median home price now sitting at around $314,000. But here's what's really terrifying. This isn't just a gentle correction. This is a market in complete psychological collapse. Homes that once sold in days are now sitting on the market for over a month, and more than 60% of properties are selling below their original asking price. That's not a market adjustment. That's a market capitulation. Over 400 active listings are choking a market that simply doesn't have enough qualified buyers to absorb them. But the real tragedy is playing out in living rooms across Sanford, where families are discovering that their biggest investment has become their biggest liability. The cost of homeownership continues to spiral upward with insurance premiums that have doubled or tripled in some cases, property taxes that seem to increase every quarter, and maintenance costs that reflect Florida's harsh climate reality. The local economy, built primarily on tourism and service jobs, simply cannot support these housing costs. Families who thought they were making a smart financial move by escaping expensive urban markets now find themselves trapped in a financial nightmare where they can't afford to stay but can't afford to leave. Moving to number 9, we travel south to West Palm Beach, once the crown jewel of Florida's luxury real estate market. This city represented everything that was supposed to be unstoppable about Florida real estate. Oceanfront mansions, celebrity neighbors, and a global reputation for limitless wealth. If any market was supposed to be immune from collapse, it was West Palm Beach. But 2025 has shattered that illusion with devastating force. Home prices have crashed by over 6% year over year, with the median price now at $525,000. That represents tens of thousands of dollars in lost equity for homeowners who bought at the peak, transforming West Palm Beach from a symbol of prosperity into ground zero of Florida's luxury real estate apocalypse. The market dynamics are absolutely terrifying. Home sales are down nearly 15%, and properties are sitting on the market for over 2.5 months, compared to just over a month last year. Active listings have surged by almost 20% as sellers flood the market in a desperate attempt to escape before values fall further. But here's what makes West Palm Beach particularly shocking. This was supposed to be the market where wealthy buyers provided an endless floor of demand. International investors, northern snowbirds, and celebrities were supposed to keep this market immune from economic downturns. Instead, even millionaires are walking away from properties, unwilling to catch a falling knife in a market that seems to have no bottom. The high cost of living, combined with insurance premiums that can exceed $10,000 annually for waterfront properties, has created a perfect storm where even wealthy buyers are reconsidering their Florida dreams. The days of multiple offers and waived inspections are gone, replaced by a tense standoff between desperate sellers and increasingly cautious buyers. At number 8, we arrive in Orlando, the global capital of family entertainment, where Mickey Mouse magic was supposed to provide eternal demand for real estate. Disney World, Universal Studios, and countless other attractions were supposed to make Orlando's housing market recession-proof. Instead, 2025 has proven that not even Disney magic can save a fundamentally overvalued housing market. Home values have fallen over 4% to around $375,000, but the psychological damage goes much deeper. Families who bought homes believing that Disney-driven demand would protect their investment are now staring at paper losses of $30,000 to $50,000 or more. The inventory explosion tells the real story. Listings have increased by 33% year over year, creating a suffocating oversupply that stretches across the entire Central Florida region. Over 40% of homes undergo price cuts, with sellers slashing prices by tens of thousands of dollars just to generate a single showing. But Orlando's crisis runs deeper than just oversupply. The city's economy, while diverse, is still heavily dependent on tourism, hospitality, and service industries that simply don't pay wages sufficient to support these housing costs. Theme park employees, restaurant workers, and retail staff who were encouraged to buy homes during the boom now find themselves in financial quicksand. The builder panic is particularly revealing. Construction companies that were scrambling to keep up with demand just 2 years ago are now offering unprecedented incentives, paying closing costs, buying down interest rates, and even including luxury upgrades just to move inventory. This isn't confidence, this is desperation. Number 7 brings us to Fort Myers, once marketed as Florida's affordable paradise, where retirees and snowbirds were supposed to find their slice of tropical heaven without breaking the bank. The promise was simple: endless sunshine, a relaxed coastal lifestyle, and steady home appreciation that would protect retirement savings. That promise has been obliterated in 2025. Home prices have collapsed by over 12%, with the median price now around $325,000. For families who bought at the peak, this represents catastrophic losses of $40,000 to $60,000 in equity, leaving many underwater on their mortgages. The market carnage is visible everywhere. More than 31% of listings undergo price cuts, often by massive amounts, as sellers desperately try to attract buyers who simply don't exist. Properties that once sold in a week now sit on the market for almost 3 months, bleeding value with every passing day. But Fort Myers' pain goes beyond just falling prices. With an average household income of just $59,000, homeownership here has become mathematically impossible for most working families. The disconnect between local wages and housing costs has created a market that exists primarily for out-of-state buyers who are increasingly reluctant to enter a falling market. The local economy, built on tourism, construction, and retiree services cannot support these price levels. Restaurant servers, hotel workers, and retail employees who were encouraged to buy during the boom now face the crushing reality that their homes have become financial anchors rather than assets. At number 6, we examine Sarasota, a city that was supposed to represent the perfect middle ground in Florida real estate. Not as expensive as Miami, not as touristy as Orlando, but still offering pristine beaches and cultural amenities. Sarasota was marketed as the smart choice for buyers priced out of more expensive Florida markets. That narrative has completely collapsed. Home values have fallen over 9% to a median price of $415,000, representing a dramatic reversal in a market that seemed unstoppable just months ago. The number of homes for sale has exploded to over 2,700 active listings, creating a suffocating oversupply. Properties now sit on the market for over 2 months, more than double the time during the pandemic boom, and a staggering 83% of homes sell below their original asking price. This isn't market negotiation, this is market capitulation. The affordability crisis in Sarasota is particularly vicious because the local job market has not kept pace with the housing explosion. Arts, hospitality, and service jobs that define Sarasota's economy simply cannot support these housing costs. Families who thought they were making a smart compromise by choosing Sarasota over Miami or Tampa now find themselves trapped in a market that's falling faster than they ever imagined possible. Number 5 takes us into the ultra-exclusive world of Aventura, a city that was supposed to exist in its own financial bubble, immune from the economic storms affecting the rest of Florida. With luxury condos, world-class shopping, and a lifestyle that attracts international wealth, Aventura was marketed as the ultimate safe haven. But 2025 has shattered that narrative with shocking force. Home values have crashed by over 11%, and properties now sit on the market for over 4 months compared to just 1 month last year. An incredible 92% of homes sell below their asking price, representing complete seller capitulation. What makes Aventura's collapse particularly stunning is that this was supposed to be the market where global wealth provided an endless floor of demand. International investors, celebrities, and ultra-high net worth individuals were supposed to keep this market immune from broader economic downturns. Instead, even wealthy buyers are walking away. Rising insurance costs, property taxes that can exceed $20,000 annually, and the growing recognition that climate change poses real risks to South Florida real estate have spooked even the most affluent buyers. At number 4, we explore Fort Lauderdale, once considered the stable heart of South Florida's real estate market. With a thriving tourism industry, strong local economy, and proximity to both Miami and the Everglades, Fort Lauderdale was supposed to represent sustainable growth rather than speculative excess. That stability has proven to be an illusion. Home prices have fallen over 6% to $525,000, with average price per square foot down over 15%. This indicates that sellers are struggling to get anywhere near their desired prices, forced to accept whatever offers materialize in an increasingly thin market. Sales volume has collapsed by almost 15%, and properties sit on the market for nearly 3 months compared to just over a month last year. Active listings have surged by nearly 20% as sellers flood the market, creating an oversupply that overwhelms the limited pool of qualified buyers. The dream of stable homeownership in Fort Lauderdale has become a financial nightmare for thousands of families who believe they were making conservative investment choices. Rising insurance premiums, increasing property taxes, and stagnant wages have created a perfect storm where homeownership becomes a constant financial struggle rather than a path to wealth building. Number 3 brings us to Miami, the cultural and economic heart of South Florida, where art, finance, and international business were supposed to create endless demand for real estate. Miami represented the ultimate Florida success story, a truly international city with diverse economic drivers that could support premium real estate prices. But even Miami couldn't escape the 2025 housing apocalypse. Home values have fallen over 10% to a median price of around $415,000, representing a dramatic reversal in a market that had been on an absolute tear. The number of active listings has exploded to over 2,700 properties, creating a suffocating oversupply. Properties now sit on the market for over 2 months, and an incredible 83% sell below their original asking price. The affordability crisis in Miami is nothing short of vicious, as local wages have not kept pace with the explosive housing growth that defined the pandemic years. Families who believed Miami represented a safe investment, a stable place to build wealth through real estate, are discovering that they've fallen into a financial trap. The combination of falling values, stagnant wages, and rising costs has made Miami one of Florida's most brutal housing corrections. At number 2, we examine Naples, once the undisputed crown jewel of Florida's Gulf Coast. Naples represented everything that was supposed to be bulletproof about luxury Florida real estate. Million-dollar estates, endless demand from wealthy retirees, and a reputation for steady appreciation that attracted conservative investors seeking safety. The 2025 collapse has been absolutely brutal. Median home prices have plummeted nearly 19% to around $600,000, representing jaw-dropping equity losses for homeowners who bought at the peak. Sales volume has fallen 15%, and properties now sit on the market for over 3 months compared to just over a month last year. But what makes Naples particularly shocking is that this was supposed to be the market where wealthy out-of-state buyers provided an endless safety net. Affluent retirees from the Midwest and Northeast were supposed to keep demand strong regardless of broader economic conditions. Instead, even wealthy buyers have fled. Rising insurance premiums that can exceed $15,000 annually for waterfront properties, surging property taxes, and growing awareness of climate risks have spooked even the most affluent buyers. Luxury homes that once sold overnight now sit on the market for months, with sellers slashing prices by $50,000 to $100,000 just to generate interest. Finally, we reach number 1. Tampa, the epicenter of Florida's housing apocalypse. Tampa was the poster child for Florida's pandemic housing boom, where investors and families poured money into a market that seemed to offer unlimited upside. Prices skyrocketed nearly 50% from 2020 to 2022, making Tampa ground zero for speculative excess. The 2025 correction has been devastating. Median home prices have fallen to approximately $400,000, down from $445,000 just 1 year ago. That represents a loss of more than 10% of home values, translating to tens of thousands of dollars in vanished equity for countless families. But Tampa's unraveling isn't just about numbers. It's about psychology. The confidence that once defined this market has completely evaporated. Inventory has jumped 35% year over year, and a staggering 43% of sellers resort to painful price cuts, sometimes reducing prices by $25,000 to $50,000 just to attract a single buyer. Properties that once sold in a weekend now sit on the market for almost 3 months, bleeding value with each passing week. The frenzy that once defined Tampa has been replaced by a desperate scramble for the exits, with investors who once bought properties in bulk now rushing to liquidate their holdings. Rising interest rates have frozen out first-time buyers, while soaring insurance premiums and property taxes have pushed middle-class families beyond their breaking point. The industries that made Tampa a growth powerhouse, finance, healthcare, and technology, are cooling, removing the demand that once supported sky-high valuations. Tampa has violently swung from Florida's golden child to its most dangerous market, a cautionary tale of how quickly euphoria can transform into devastation. So here we stand at the end of our journey through Florida's housing wasteland, and the picture that emerges is both tragic and predictable. These 10 cities represent millions of families whose dreams of Florida living have become financial nightmares. They represent the human cost of a market built on speculation rather than sustainable economic fundamentals. But this story isn't just about real estate numbers. It's about the fundamental disconnect between housing costs and local wages, between climate reality and development patterns, between sustainable growth and speculative excess. Florida's 2025 housing crisis is a warning about what happens when markets lose touch with economic reality. For the families trapped in these markets, the pain is just beginning. Many are underwater on their mortgages, unable to sell without devastating losses, yet unable to afford the rising costs of homeownership. They're caught in a financial purgatory where staying hurts and leaving hurts even more. Yet within this crisis lies opportunity. For the first time in years, Florida real estate is returning to price levels that reflect local economic realities rather than speculative fever dreams. Patient buyers with solid financial foundations may find opportunities that seemed impossible just 2 years ago. For sellers, the message is clear. The days of overpricing and expecting multiple offers are over. Success in this market requires realistic pricing, strategic positioning, and patience. The market has fundamentally changed, and those who adapt will survive, while those who cling to 2021 expectations will continue to suffer. The era of easy money in Florida real estate is over. The bidding wars have ended. The quick gains have evaporated. In their place is a market that demands careful analysis, conservative assumptions, and respect for economic fundamentals. This correction, painful as it is, may ultimately be healthy. Markets that grow too fast and too far from economic reality eventually face reckoning. Florida 2025 is that reckoning, and while the pain is real for those caught in the collapse, it may create the foundation for more sustainable growth in the future. The Florida dream isn't dead, but it's certainly been repriced. For those willing to wait, to be patient, and to buy based on value rather than speculation, opportunities may emerge from this chaos. But for now, these 10 cities stand as monuments to the dangers of believing that real estate only goes up, that markets can ignore fundamentals indefinitely, and that dreams built on speculation can last forever. The reckoning has arrived, and Florida will never be the same.